Hello everybody, how's it going today? It's now August the 21st, it's a Wednesday, it's about 7 p.m. here in Vancouver, British Columbia, and we're going to do a technical analysis on Bitcoin today. So I hope that you guys have been following me for the past maybe 2 days now to see what kind of range we were getting and how this was going to be bounded. So let's do a very quick recap for the people that are unfamiliar with where we have been so far. And one of the main concepts that we're going to talk about is the Fibonacci. Let me just get my drawing tools here. Well, for those that don't know, just a quick tip for you, okay? If you are drawing a line like this, and then you do that, notice how you can just keep drawing it without having to re-choose a line. All right, now let's say that this was actually checked off right here, the drawing mode. Then you can't do that, right? You literally can't do that. So you make sure that you guys stay in this drawing mode, and it actually helps a lot at the same time. So anyways, just giving you guys some quick tips. So first of all, we're going to deal with the Fibonacci retracement and specifically the golden ratio, okay? So the golden ratio is a sequence of numbers or a ratio from the Fibonacci sequence of numbers, like I've always mentioned. And it's found commonly everywhere in the universe, whether it's from the way the galaxies are shaped and spiraled, to the way our genes are coiled in our DNA, to the way sand is shaped, to the way our bodies are proportional to each other, to the way architects design buildings. It's also found in the stock market as well, right? And if you guys are curious about that, go check out the Fibonacci sequence of numbers by Mr. Fibonacci himself. So then the concept is this, right? You want to go long at the golden ratio to the golden pocket area. If you're not familiar with what the golden pocket is, it is the 0.65%, right? There's a 618 for the golden ratio, and then the 6.5 for the golden pocket. If you are not familiar with how to put it in there, randomly double click on the Fibonacci retracement here, and then just choose any of these ones, make it make it 0.65, okay, like that, check mark it, and choose whatever color you want, usually yellow, because it's a golden pocket, right? It's a very significant number. So now that we've got that theory established for the uptrend, right, when we want to go long again, the same theory applies for the downtrend, okay? The same theory applies for the downtrend, where bears will enter the market here at the golden ratio, right? So the converse must apply as well, right? If A happens, well, then B is most likely to happen too. If A is hitting at the golden ratio, then B, or sorry, if A is going up there to the golden ratio, right? When people are going long, then B, people are also going to go down at the golden ratio. Okay, now that we've established that quick theory, we're going to talk about this support that has been established for a very long time now. And this one here, I would personally call it the, not even an interim support, I'd call it like a long-term support that's been established since basically, Brianna's really distracting me right now. She's playing with her hair.
Sorry.
I'm just joking. Yeah, I'm sorry, I'm really distracted. What was I talking about again? So this is a symmetric triangle right here, okay? So this is the symmetric triangle, and I personally would call this the apex in here, okay? So that is the apex in that particular zone. The apex is where push meets pull, okay? For those that are unfamiliar with how basically symmetric triangles work, okay? Symmetric triangles work by like this. So they're going to be pushing down on it, they're going to be pushing down on it, and eventually when you get closer to the apex, that is when it actually starts to do something, right? It has a chance of it breaking up or down or something like that. And then, yeah, so I'm waiting for this particular break. And one thing I want to show you guys as well, just to catch you up very quickly, like let's say I went to a 12-hour chart, right? So if I went to, actually let's say I went to a 2-day chart. Sorry, I don't know why it's taking so long right here to load, but it seems like the internet here is a little bit slower than normal. All right, so just to give you guys an idea, going to the upside, right, was very logical to assume that we would get a rejection here at the 618 region. Yeah, a lot of people thought that, right? That's where bears enter the market, and that's where the theory of ours is actually kicking in as well. So then we go to like a 2-hour chart, if it'll load. I apologize for the wait. All right, so now on the downside, right, like we're talking about, let's say just testing this one. Let's say testing this one. Sorry about that, it's really loud. This one here probably, excuse me, 786 level. Now we're going to see this over here. Sorry, I'm zooming further out right now. So now what I'm saying is this, okay? Is this possible over here where bears are going to enter the market right around this particular range? So then let's say I took my Fibonacci retracement of that right here, and then my target for entering a short is still right there. But yesterday I mentioned two possible scenarios, the bear scenario, okay? I mentioned specifically that we would probably bounce off of there. So I took the Fibonacci retracement of there, right? And I said something yesterday that we'd probably get a solid bounce above, like, you know, these particular regions over here, right? And that's pretty much what ended up happening. I said around 10,250, I think. I think that was like my number. But I think we're going to get a much higher bounce than that right now. So we did bounce off of this trend line, which is solid, right? We did bounce off the 76 fib level. I predicted the 618. I was wrong there by about 200 bucks, which I admit. But now that we're probably going to bounce off of here, I just have a feeling that, not a feeling, but I've got a good hunch, just based on all the evidence that we see, that we're most likely going to end up trending to around the $11,200 range, or at least just $11,000 range in general. That might even be the highest, you never know. And for all we know as well, if it doesn't hit this particular region, we could also just fall completely below. And you guys got to keep in mind where the supports are, okay? The main support right now is right here at around $9,000, okay, 9,100. Right there, right? 9,100 if that breaks. But then, of course, 9,500 will be the first mode of support there. And then 9,100 right after that if we break, right? Makes sense. If we go long, guys, we've got to definitely break well above, you know, around 11,000, I'm guessing 600-ish, okay? And then we would most likely end up uptrending all the way to 11,200 ranges to hit the top end of here. But right now, as it stands, this is more of a refresher course or refresher video from what I've already reiterated yesterday. And all that we're adding to this particular video is we're adding the fact that, hey, we're bouncing off of this trendline support. It's been a few hours later already. And let's go for a good target here around 11,200. That's very conservative. So other than that, thank you very much, baby whales, for all your support and love. If I have not processed your Udemy, make sure that you guys are actually tweeting Udemy or just writing it here in the channel below, or just direct message me on Twitter, and I'll be sure to take care of that for you right away. So have yourselves a great day. Thank you once again for watching this video, and I look forward to making many more for you in the future. Bye now.